The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the weekly perspective for the week ending 26 July 2024. I think one of the most important news items to get out, and it's not just this week, but it's been of late, and that is the amount of insiders that are selling massive amounts of stock. Many insiders are dumping, and they are dumping when? At the top. The S&P's been flirting with new highs for a long time, and the amount of shares that are being sold by the wealthy, the elites, the insiders is at a 10-year high on aggregate, on balance. So they know what's coming, and you should know what's coming. Does that mean that a stock market crash is imminent? The answer is no. But Harry Dent came out recently, and I forget the date that he had, but I know it was this year. And he's predicting, I believe it was a 90% decline. It may not be that much. I wouldn't rule it out entirely. The point being is that if you are invested in the stock market or are overexposed, it's time to protect yourself, either with lightening up your positions, buying puts, maybe just taking some cash off the table or what have you. But wake up and see what's going on with the insiders. They usually lead. It's time for you to take action if required. Another situation that some of you probably are aware of, but it bears repeating. This came out earlier in the month from the American Institute for Economic Research, the end of restaurants as we know them. And again, this is giving us real clues in the real economy, the physical economy, what's really happening. Since the start of 2024, numerous well-known restaurant chains have announced sizable closures and incrementally more drastic restructuring efforts. TGI Fridays has closed numerous locations. Denny has shut down 57 restaurants. Boston Markets drastically reduced the number of its restaurants from around 300 to just 27. Mod Pizza abruptly closed 27 locations across the U.S., including 5 in California. Coco's Bakery and Caro's chains closed more than 75 locations, leading to a federal lawsuit by former employees. PDQ, a regional restaurant chain, closed 8 restaurants across North and South Carolina in February of this year. Outback Steakhouse parent company Bloomin' Brands announced shuttering of 41 locations of Outback Steakhouse, Carrara's Italian Grill, and Bonefish Grill in February of 2024. Subway has undergone a massive drawdown, closing over 400 underperforming locations since last year alone, and Applebee's has been selectively closing locations since the start of 2024. In 2024, Buffalo Wild Wings has eliminated 60 locations in the United States. IHOP, International House of Pancakes, will wind down 100 locations. Other firms eliminating locations include Pizza Hut, Red Lobster, Hooters, and Chili's, and a handful of others may close down entirely. It is certainly time to pay attention to what's going on in the stock market and what's going on in the retail sector. And those are just the restaurants. You could also bring up information about big corporate chains, box stores as they're referred to, and how many of those are closing. The economy is shrinking. It's contracting. It's global. These are things you don't hear on the pep talks, on the talking heads across the mainstream financial media. Things are great. Interest rates are going to come down. Happy days are here again. Soft landing. All this nonsense that's absolutely not a fact. I'm giving you information you can utilize to prepare for, let's say, what's coming. And I think the recession's been in a recession for some time, even technically. Above and beyond that, I think it's going to continue momentum-wise, which means it could get worse, not better. And I believe it will before things do turn around. I'm very concerned about the stock market and have been for probably too long, but I'd rather be early than late. And I do think before this year ends that you will see stock market correction of significance. This is an old article, but I thought I'd bring it up anyway because this just, again, affirms my assertion about how much contraction there is in the economy. This came out in 2023, but talks about some of the big retailers that are going out of business completely or downsizing. Christopher & Banks, stores closing 449. Family Video closing 250. Starbucks, stores closings 500. The Gap, store closings 220. Godiva Chocolatier, store closings, 117. Justice, closing, 103. Banana Republic, store closing, 130. The Children's Place, closings, 122. J.C. Penney's, up to 90. Fossil, between 65 and 75. Disney, closing at least 60. Express, closing up to 60. Macy's, closing 46. Bed Bath & Beyond, closing 360. Fry's, closing up to 31. Stukes & Field, closing 25. Designer Brands, closing up to 24. Best Buy, closing 30. GameStop, stores closing, dozens, question mark. Paper Source, at least 11. Kroger, stores closing, 9. Goodwill, closing 8. Michael's, at least 5. Toys R Us, 2. Bloomingdale's, closing 1. David's Bridal, closing approximately 300. Buy Baby Buy, 120. Tuesday Mornings, 200. I think you get the picture. This economy, physically, the real economy that we all live in, has contracted substantially. Look at I don't know any mall. I don't travel the amount that I used to, but malls in this area and others that I have visited are ghost towns a lot of times. I mean, there's just a few stores that are open. Even the cornerstone buildings, such as Macy's in my local one here, has left. So they're open, but they're very, very sparsely attended. And this is just a sign of the times, not to be doom or gloom, just to be real and make sure that if you have profits in the stock market, particularly, to take a look at those and secure them if you can. I'm just going to touch on gold slightly. This came from the World Gold Council. Ballots to bullion examining the U.S. elections' effect on gold. You can read the whole article. Basically, elections really don't have much effect. That's what it talks about. It talks about what really drives it is what happens with economic policies, both foreign and domestic, and what's relevant behavior in the financial asset market. So that's what drives it, not what particular party gets in. As for silver, really the main thing to talk about for the week, of course, is that silver sold off heavily. Gold did sell off, but not nearly the amount. Silver went down more than 4% in one day this week. And now the question is, where's it going to land? Is it going to stay there long? Is it the top end and all those questions? Basically, I've already done a preview to this question for our premium members some time ago. And I will just stand by what I said at that time. Could I be wrong? Of course. One of our members asked, how low can silver go? And the answer I found was round numbers, about 26. I don't think it'll go lower than that. It could. But this was a big sell-off. It was pretty obvious it would happen basis the Commitment of Traders report. It's no big, huge surprise as far as how the Commitment of Traders indicates when one side gets overextended and the market gets overbought from the derivatives market, meaning the futures exchanges. And that, of course, is what sets the price in the physical market. So one other statement is gold is up, I think it's 16% for the year, and silver is up now at this time, as of the close Friday, like 17%. So basically gold and silver at this point in time are up about the same amount. Silver's slightly higher than gold year over year from the beginning of the year, January 1st, till almost the last day of July. It had been up much higher relative to gold just a few weeks back, but that's the silver market for you. But as far as where we stand right now, they're basically even. So that is going to wrap it up for this week's Weekly Perspective. This is David Morgan of themorganreport.com signing off until next week. Hello, it's David Morgan again. The financial landscape has drastically shifted since the pandemic. The old rules, they no longer apply. Inflation is spiraling and traditional investment paths aren't making you wealthy. You're watching your wealth diminish. But here's the good news. You don't have to be a passive spectator to your own financial decline. We're thrilled to announce an exclusive limited time offer at the Morgan Report. For those who join us now as premium or mastermind members, you'll receive a complimentary 30-minute consultation with me. With decades of experience, I can help you navigate even the toughest economic climates. This is your chance to get personalized advice tailored just for you. But act fast, this offer won't last long. Whether you're looking to refine your current financial strategy or start fresh, this consultation could be the turning point. Imagine having direct access to insights that could safeguard and grow your investments during these volatile times. Signing up is easy. Just head over to themorganreport.com. As a member, not only will you get this exclusive consultation, but you'll also gain immediate access to the Morgan Report Opportunities, a resource where we share our top investment recommendations and strategies. Don't just take our word for it. New members can try us out for 30 days. If you find the consultation and advisory newsletter isn't for you, we'll refund your money. Remember, this offer is only available for a limited time. Don't miss your chance to get ahead in this uncertain economic climate. Join as a premium or mastermind member today and start your journey toward a more secure financial future. Thanks for watching. If you have any questions about the offer or your investment strategy, leave us a message. Until next time, stay smart, stay safe, and keep building your wealth.